Guys, I don't say, oh, you know, yeah, hey, we might go up. Hey, we might go down. No, I put my money where my mouth is, and then I post all of my plays for free on Twitter. And a bunch of people make their money alongside, all right? Based off of, you know, the commentary that I share here and on Twitter for free, okay? We've been buying these dips. We bought the dip here. We bought the dip on this wick, and we bought the dip over here. So we got the dip on the NASDAQ and the IWM for multiple 200% plays at least. I could easily show you guys all of my gains, but the most important thing is the fact that other people were actually making money. And look at what happened. We were just buying into dips. We were averaging down. We were buying into weakness. And now the NASDAQ is starting to show some sort of weakness, right? The 30-year bonds are showing tons of weakness. And now essentially we have to see where the market is going to go. So if you guys have been enjoying my content, if you guys have learned anything from my videos, please drop a like, a comment, a subscribe, put on post notifications. It really, really helps the channel. And honestly, let's just get started with the video. What an amazing day. Number one, lots of people make money on my plays on Twitter. Okay. Number two, the NASDAQ bounced. But now number three is the 30-year yield is falling below support. So I bought into lotto puts expiring tomorrow, because if we continue falling and we start to really skyrocket down on the 30-year bond, then this will not be good for the NASDAQ potentially. And that's essentially what I'm betting on. That's why I bought into lotto puts. I'm willing to have them go to zero. In terms of the stock price itself, the NASDAQ closed in a very bullish way. It closed right on top of support. Okay, so that's why shorting it at this point does not really make a whole lot of sense. That's why I bought into lotto plays. So we closed above support. The 30-year bond is breaking support, but the equity price is increasing. So there's a clear disparity in what's going on. So we need to see if this was just a relief rally because the stock price fell so sharply, or is this an actual bounce and will we start to make new all-time highs now? Most likely what's going to happen is if the bond breaks and closes multiple layers below, right? Then the NASDAQ, I do believe, will potentially fall back down these lows, and then we can come back and retest the 200 simple moving average, most likely. But it all depends on the 30-year bond. And in my videos, when I say the 30-year yield, I'm like, it's a bad habit. I mean to say 30-year bond, and I mean to say 10-year yield. Okay, so whenever I say 30-year, just assume that I mean the 30-year bond. Okay. So the NASDAQ, not much else to talk about. The indicators are pointed upward. We closed above support. Looks great. Fine. But the 30-year bond is weak as hell. So let's go ahead and take a look at the SPY now, right? So the SPY closed below this uptrend channel, and it failed to close above the 50% fib level at 439.84. So essentially it failed to close above 440. And that would have been very bullish as well. But the fact that we closed below multiple layers of resistance, as well as this 20 exponential moving average, is not bullish for the SPY. But I mean, all of this stuff is completely irrelevant. It all depends on the 30-year bond currently. But as you can see, technically we closed under 3 important levels of resistance. Cool, right? On the SPY. Now let's go ahead and take a look at the 10-year yield as well as the IWM. So the 10-year yield is breaking above multiple levels of resistance, and it looks very, very strong here on the MACD. The RSI still has tons of room to the upside. So the 10-year yield going up like this shows us that investors want shorter term, riskier assets and plays, which is why the stock market is supposed to be doing well in the short term. And more specifically, the IWM does better when the 10-year yield is bullish like this. Okay. So the IWM, as you can clearly see, closed above this very important trend line here, closed above the 50% fib level here, and it unfortunately failed to close above the 61.8% fib level at 224. So you can see that it failed at these two levels of resistance. The SPY failed at these levels of resistance as well, but the NASDAQ closed above support. So the NASDAQ, I mean, technically is somewhat bullish because we blanketed on support, but the IWM, you know, it failed to cross and close above these key levels of resistance. So we need to see if this move is sustainable to the upside. But again, it really all depends on the 30-year bond. And I'm very, very sorry. I know I keep going back to the 30-year bond, but that is really just the driving force. I mean, usually I go in depth on the MACDs and the RSI, everything on the main indices, but currently none of that really matters at all. The correlation, the heavy correlation, is with the bonds and the yields. Okay, so those are the main things that people are watching right now. And yeah, essentially, if that goes down, if the 30-year bond goes down, the market's going down. So regardless of how bullish everything looks, but yeah, that's currently what's been happening. But of course, we can potentially puke, right? And then I can be completely wrong, and the NASDAQ can continue going on higher. But currently, this entire move here and this entire move here, the correlation has been very, very sound that when the 30-year yield shows extreme weakness, it is not a good sign for the equities market. All right, so there is my analysis for the three indices, the 10-year yield and the 30-year bond. Now let's go ahead and take a look at the dollar. All right, so the dollar clearly still in an uptrend. It doesn't look like it's going to stop. The MACD is oversold. The RSI is still over, you know, still far away from being overbought. So this can continue going on higher. And basically, when the dollar goes up, it means that investors are short-term getting wary of the move in the stock market. So the dollar can potentially be going up because the 30-year bond is going down. Okay, and when the 30-year bond is going down, it's essentially, you know how the term, oh yeah, I want to keep my money in cash. When the dollar goes up, that's literally what hedge funds and banks are doing. They want to keep their money in cash. You get it? So that's why the dollar goes up, because they'd rather let the stock market even out and fall, etc., put their money in cash, and then load back up into the stock market after the prices have fallen. So that's why the dollar is going up. Okay. All right, now let's take a look at Bitcoin. So Bitcoin, we were looking at yesterday, it was trading outside of the upper level of the B band. It does look like we are now, you know, coming back to consolidate a bit, which is still very, very bullish. So like I said, we might come back down to the 52,000 level, bounce off of that level, and then continue on higher. But, you know, back here in early October, when we did cross and make this huge move from 40 to 50 or 48,000, right? Many people were expecting a dip down here. That never came, and we just continued going on higher. So that might be the same case as this last time. We might not actually retrace back to a solid entry level for people to enter, and we can just, you know, consolidate above here and continue going on higher. So that's the reason why I bought into Mara calls expiring in December and in November, because this day-to-day price action on Bitcoin, it could consolidate a bit here, blah, blah, blah. But unless we cross below multiple important levels of support, I'm still going to be very bullish on Bitcoin, and especially on those Mara calls. So overall, very, very strong move on Bitcoin. Also, you know, we saw that the RSI was oversold. So it was just a nice opportunity to consolidate a bit. This is not bearish at all. We could look at Ethereum. Ethereum is starting to catch up to Bitcoin as well. There's still tons of room to the upside on Ethereum, altcoins, the crap coins, all of that stuff. So yeah, I hope you guys enjoyed the video. Go ahead and follow me on Twitter. Drop a like, a comment, subscribe to the channel, and definitely put on post notifications. I would really, really appreciate it. And I will see you guys tomorrow. Thank you so much.